Today, I'd like to discuss the biggest risks to the US stock market in 2015. Risks always exist, and risk assessment is an ongoing process. There will always be things we need to look out for. And particularly at this time, there is a risk of not reaching new highs in 2015. The first risk is business cycle risks. The risk of a recession must be monitored. An accumulation of imbalances in businesses in some sectors operating above optimum capacity may unravel due to an external shock. The chances of this happening in the US economy are very low. Strong dollar risks. A strong dollar will affect exporters in the US, but this in itself is unlikely to trigger a recession. Fed risks. Any misjudgment by the Fed chair, such as raising the interest rate too soon or too much, could hurt the US economic growth. Earnings risk. Multinationals and exporters are affected by the strong dollar, and for the first time in the recent few years, estimates of S&P 500 earnings per share is flat. Greece and Europe risks. The Greek contagion is underestimated. I believe a Greek crisis could indeed create a substantial shock and concomitant volatility in the global financial markets. Enough to trigger a 10% correction in the US markets? Yes. A 20% bear market decline? Probably not. Ukraine risk. It's obvious that the US does not go to war with the Russians directly, and it's always possible that Ukraine could turn into a bloodbath. Ultimately, this is of little consequence to the US markets. China risks. China is trying to make a soft landing on their banking reforms. China is not a particularly important source of global demand for finished products. In fact, lower Chinese demand helps the world economy via lower commodity prices. Thus, global risks emanating from the China are not particularly great. Partly for this reason, I rate the likelihood of a correction of between 10 to 20% during the course of 2000 to be very high, particularly between now and July. Thank you for watching.